So welcome everyone. My name is Kristen Parent with the Middleton Chamber. We're very excited to have you guys here for our January economic development. I know we've all done more than one Zoom at this point. Just a couple reminders that microphone button on the bottom will have a slash through it when you are on mute. And we would ask you to do that during most of the presentation today. There will be times throughout that the group is going to ask for input or questions, so then you can feel free to take yourself off at that time. At the same, we are going to be monitoring the chat, so feel free to drop any questions into there that you might have as you're going through. And we also encourage you to leave your cameras on if that's possible. So it helps to know that we're talking to people and not just black screens, and that you can hear us and you're enjoying what you're learning. So with that, I would like to introduce Broadwing Advisors and Jesse Schluter, our speakers for today. So founded in 2013, Broadwing Advisors is a commercial real estate advisory and brokerage company that specializes in office, industrial, flex, and life science buildings. Broadwing provides a consultative approach which aligns its clients' business goals and strategy to their real estate needs. Craig Stanley and Deanna Porter have over 40 years of experience in commercial real estate with a strong understanding of all sides of a transaction. And Jesse Schluter is here today and he founded Wisconsin Commercial Real Estate, a full service commercial real estate brokerage firm specializing in restaurant and retail real estate. And he did so in 2016. So Jesse possesses a 16-year track record of success in Wisconsin restaurant and real estate. In addition to practicing real estate brokerage, he's also a battalion chief with the Middleton Fire Department. So I'd love to turn it over to you guys at this time.
Thank you, Kristen. Thank you all for joining us today. We are going to give you an overall view of what the market looks like and touch on some of the trends for the future. During this process, we are going to take some time to pause for questions, so feel free to use the chat function. Next slide, Kyle. Today, Craig and I are going to walk you through the office market and what that looks like, as well as the industrial markets. Then we'll turn it over to Jesse to provide an update on the retail market, and then back to me for a high-level overview of the multifamily. And again, at the end of this session, we'll have some time for questions.
So kicking off on the office market, just for perspective, just to kind of orient everybody with a map, when we talk about the office market, we sort of break our markets broadly into 4 sub-markets, sort of central, east, south, and west or far west. And I do want to note, if you have any questions along the way, feel free to throw them into the chat. We're going to pause after each section that Deanna outlined. But if you forget anything, we're happy to answer questions at the end and perspective at the end. Thanks, Kyle. So first, kind of high-level perspective, there's 2 areas we cover. There's sort of the demand side and the supply side of office. The demand side is obviously what do tenants and users want of their real estate. The supply side is what's being absorbed in the market. So high level, historically, Madison has a very robust and safe and secure office market. Consists of 17.4 million square feet. Just for perspective, Chicago's smallest market, the O'Hare submarket, consists of 24 million square feet. So we're a relatively small market, insular market. We've had a decent year of projects that were already underway, of new construction and projects that have been delivered.
And to touch a little bit on the far west office market, which Middleton is a part of, so we wanted to kind of give you a snapshot of what's going on in your backyard. So the far west market consists of the 5 million square feet, 17 of the 5 million square feet in the overall market. Generally, this remains a healthy market. Right now, the vacancy is, as you can see, around 7%. And just for some perspective, the office market on the east side tends to fare better than the west side, where on the east side, its vacancy is about 17% as compared to the west side at 7%.
And shifting over to the supply side, absorption is an interesting, and that really tracks what's going on in the market, where it's trending. The transactional volume nationwide dropped 60% this year. Actually, it dropped 60% in about 6 weeks. For perspective, in our last downturn, typically you see recessions drop 10 to 15%. So COVID obviously had a very big impact on how the office market. As a result, we're seeing corporations put subleases on the market. There are currently 9 available. In fact, we have numbers already showing there are 5 more this last quarter. The numbers you're seeing are from end of third quarter, and we just got preliminary numbers Monday, and we're seeing 5 additional subleases come on the market. And as a result, we're seeing market space come onto the market, which is what negative absorption means, is more people putting space on the market, less people leasing. And most corporations remain work from home with plans in second and third quarters where most of the larger corporations are coming back. Kyle?
Again, just a deep dive into the West Side market. 2 of those 9 subleases that Craig outlined are in the Middleton market. What we're starting to see is organizations are doing more short-term leases to kind of bridge the gap on planning and what they're going to do with their work from home strategy. We've actually seen last quarter 2 deals that hit, totaling I think about 26,000 square feet, but Exact Sciences put a 30,000 square foot sublease on the market, so that kind of negated that absorption. And then we just learned recently that we'll see this quarter another 95,000 square feet hit the market with John Deere Credit downsizing.
So what does this all mean? We did a little more detailed dive on what the quarter to quarter and every 2 quarters has looked like in our market. And you could see when COVID hits and what's going on right now. Those preliminary numbers I mentioned that we received on Monday, and we'll have a full detailed report from us that we'll be distributing to people, and we'll make sure that the chamber has it as well on the office market. But we saw a 2% jump, which is enormous for our market this last quarter. We're going to verify, but it's north of 11%. And it's really hard to predict because most corporations don't know what their post-COVID vacancy, what their demand is going to be. So the ceiling, that orange arrow going up, we just don't know where it's going to go. What we do know is in down markets, office tenants tend to take advantage of lease rates that are softened or get less expensive. And so there's something called flight to quality. Class C tenants that are in Class C office buildings go to Class B, and Class B tenants that are in Class B office goes to A because rates come down and tenants can afford it. Some of the national prognosticators predict that we may not see, and it's really hard, but recovery until 2024. And more than anything, and we're all experiencing because we're on this call this way, is the future of work has changed. Mobility, productivity, location, design, it's all changed. I'm happy to answer any questions about that as we go, but I'm going to look at the chat right now on any existing questions that are out there. Venues, that's not it. It is. East and West Side vacancy spread. East Side historically has followed the economy faster. And so the East Side has more vacancy right now. I expect the West Side to accelerate and to see. I don't expect because housetops generally follow office real estate. I do expect the West Side to have less of issues than the East Side just because of pure volume. That's generally what we see in the market and what's been in our market historically. I do see the next question was, do you hear of tenants downsizing due to high productivity and work from home? I do see significant rise in vacancy because of that and tenants giving back space. The challenge most of us in the industry are having is what does that look like? How much does that look like? And the question is, I think it could be anywhere as low as 15% rise in vacancy to as high as 30. I just can't predict what that number is going to be. I know it's going to be north of 10. But I just don't know what that's going to be. And just a 10% savings on a 20,000 square foot tenant in the suburbs represents $100,000 savings to that company on an annual basis. Co-working. Co-working has had an interesting ride. And Deanna, I'm going to throw this question to you.
So the question is, with that, do you see an increase of co-working opportunities? I think for our market, we may see some companies trying to be creative and create some co-working opportunities within their space, but I don't think we're going to see an increase in demand with co-working. I think it's still a useful tool, but I don't think we're going to see a dramatic increase in the demand for that type of space.
Deanna, how many co-working locations do we have in Madison right now? If you count Regis.
Well, there's 3 Regis, then Industrious, there's probably 10. And then Middleton, there's 1, 2, 3 that I know of.
And John asked nationwide 60% or 60% in Madison. I can't give you the formal numbers in Madison. It would only be anecdotal based on our experience. We certainly saw a dramatic drop in our activity on the office side. We'll talk about industrial and life science a little later, but certainly on the office side, I might say it's north of 60% in terms of activity in Madison. Paul, you asked about rent. Office real estate tends to lag the economy and lag the downturn. So it takes longer, for lack of a better term, to flush out the problems. So I expect 3 to 4 to 5 to 6, it's hard for me to predict, quarters of general rise in vacancy, then stabilizing and then slowly improving. So rents will start to be lowered because of demand, lack of demand. It's just a supply and demand curve, and I expect you will see rent concessions in the coming months. We're not quite seeing it yet, but there hasn't been enough activity to outline that, to really give you solid numbers relative to that.
And Craig, and to that point, I think that, the way I outlined that a lot of companies are doing that short-term renewals. I think they're trying to bridge that gap to see what's going to happen with rents and with the market. So I think that's why we're seeing a little bit of an uptick with that strategy.
I'm sure we'll touch base on this later, but we're going to shift over to the industrial side. Again, just for perspective, how we divide our markets in terms of where the industrial buildings are in the market. The far west side is a relatively small industrial market, all really based in Middleton. The south and southeast side, east and southeast side are really where the predominant of our industrial buildings along the South Belt line, a little in Verona, but predominantly on the east side. And that's just high level where our industrial, we're not a robust industrial market compared to even Milwaukee. Milwaukee is about 5 times our size. The industrial market overall it's held its own. It's been very steady, and we don't see a whole lot of change. That's been one bright spot of commercial real estate, and we're experiencing some growth.
And again, here's the snapshot of our backyard. Again, just kind of mirroring what Craig said, our market actually consists of 5.9 million square feet. The demand has been steady. But just to point out the rise in vacancy from 2018 to 2020, it's still very healthy. So that doesn't really cause us any concern. It just remains consistent and steady.
And relative to that 1.4% that was outlined, that sort of outlines how we needed new product in industrial, and that's what's been happening. There's positive absorption. There's some new projects that have come online, and those have all been on the east side, on the southeast side, and northeast side in Sun Prairie, where some developers have put out some product with larger blocks of modern industrial space that have been leasing at a good, healthy clip. And as a result of that, we are still seeing the pricing on industrial has held its own. So there are limited options, especially kind of 15,000 and above. Some large blocks still are out there, but the activity has been a little softer on smaller users, kind of 3 to 9,000 square feet. That's where there's not quite as much demand, a little more small business focused challenges relative to COVID. Not troublesome, just not as robust as the mid-size and larger companies.
So on the west side, we did experience a very minor negative absorption last quarter. However, we do know of 2 deals totaling about 50,000 square feet that have hit the market in Q4, are hitting the market shortly in a positive absorption manner. We think in 2019, sorry, I lost my train of thought, but anyway, there's limited supply of product available.
And that west side market is a relatively small market, so a single transaction, we basically saw it as a flat market this last year. So but overall, there's very limited. If any of the brokers out there had a new tenant who wanted to move to the west side, they would have a hard time finding a 50, 60,000 square foot office or industrial building right now. So finally, we wanted to give where the market's going, and we're relative to that statement I just made. Most of the growth has been on the east side. In fact, some of the developers are still looking for new opportunities for land because the demand has been that solid. And we just expect some further suburban growth, mostly on the east side. That connectivity to Chicago, Minneapolis, as well as Milwaukee and the Fox Valley are important from an industrial perspective, and also tapping into labor forces on the east side, the south side, going north, south, east, and west. So, and then we wanted to also give a little high-level perspective on the life science market, which is our next slide. And that's another area that's been relatively strong. It's a relatively small market overall. We have the Research Park and a smattering of buildings around town, but there have been some large users that have completed things recently, which are shown, as well as some users that are in the market today that are talking 100,000 feet, 50,000 feet. There's several large users and the Research Park actually has, there are 2 projects being planned, right, one in the Research Park, one right outside the Research Park, of new buildings trying to recruit tenants because there's such limited supply out there for life science space. So any questions on the industrial side or the life science side? Hearing none, I'm going to pass that on. And again, feel free if something comes up to ask later. I'm going to pass this on to Jesse to talk a little about our retail markets.
Thank you, Craig, and thank you to everyone participating today. So Kyle, if you go to the next slide, please. So starting out, we just want to take a quick look at retail on a national level. And, is retail dead? If you've watched any media, in the last year, really the last number of years, you may think that's true. And there are some pretty tough, pretty staggering statistics out there that would support that theory. Retail vacancies nationwide have gone up the last 10 years. The end of last year at 5.2% nationally. With the pandemic, there's going to be pretty significant fallout. As you can see on the screen, about $126 billion in commercial real estate expect to trade, at distressed prices through 2022. And a lot of those spaces are larger format spaces. So malls, power centers, big box locations is where you're going to see a lot of that reduction. Some studies would suggest that by 2022, 50% of the malls in the United States will be closed or be repurposed for other uses like medical centers, office space, housing, campuses. The list kind of goes on and on, submarket to submarket, on how that's going to evolve. So a lot of what we're seeing when we see negative press nationally is really in those larger format spaces. Locally, we're going to continue to see those types of properties evolve, but it's not going to be nearly as drastic as we're seeing across the country. Next slide, please, Kyle. So if you look at Madison as a whole, we have about 39 million square feet of retail or restaurant space. The big category that we're seeing that's struggling is the malls or the larger format retail uses. Looking at the Easttown Mall as an example, that one probably has got the biggest challenges out of the other malls that we have in our community, just with a glut of vacancy, not only within the mall, but around the mall. So, we're seeing the mall owners work with neighboring property owners in the city to say, how do we redevelop something here that is going to, make sense and thrive again? And so it's going to be interesting to see, how that is redeveloped over the years to come or repurposed, depending on their new plans. But if you look to, as an example, the west side of town, the Westtown Mall, there's a lot of really good things going on that other malls in the country don't have going on. Von Maur has announced moving forward again with their new department store, the former Boston store site. Portillo's is building a new 8,000 square foot restaurant at the former Sears Auto Center site. We have a new strip center that's going to be going in right next to Firestone on one of the JCPenney's outlots. They'll have an Aspen Dental and a select number mattress store. So, those items, Hobby Lobby is going into a portion of the former Sears. So when you look at Westtown, there's actually a lot of really good things going on. And you look at the other, larger malls or lifestyle centers in the market, Greenway Station in Middleton, they've stabilized well. They have a number of new tenants that have coming in, and it's different. As an example, X Golf is moving in there, which is a golf simulating business that has a small bar component, and I know they have a number of other groups that they're working with, but it's more service oriented as opposed to hard goods retail. So we're seeing those trends. And as you look at, the redevelopment of these types of facilities, you're going to see things, more of like what we see at Hilldale, right? So you've got a hotel, you've got apartment towers next to you, you've got a mix, you've got a grocery store, you've got different things that are drawing people in, as opposed to, just kind of having your traditional hard goods being sold at those facilities. So, as we look to the statistics, vacancy again in Madison, about 3.8%, up from 3.3, it's going to climb, we'll be at 4.3 to 4.5 is kind of the range that people are predicting through the end of this year, but considerably lower than the national average that's expected to go up to 6.5%. So, we attribute that to, all the things that people always talk about when they talk about Madison, right? We've got the UW, we've got the hospitals, state capital, higher levels of income, higher levels of education. We're a good target for retailers and restaurants that are looking to grow across the country or regionally. So we're unique in that we're kind of buffered compared to a lot of these other communities that are seeing the drastic closures that you're seeing, or as I mentioned in the first slide. And because of that, we're not only a target for tenants, but we're also a target for investors. 5 years ago, we were considered a small market. Nobody wanted to touch us in terms of investments. And now REITs are coming in and are buying, properties. It's not uncommon for whether it's a triple net investment deal, a strip center, a single tenant, restaurant use as an example, that the buyers from California or Florida or Arizona. So we're really becoming more of a desirable market to invest in, where historically, 5-10 years ago, it was really more local or regional as you look to who's buying properties when they're trading. Next slide, please, Kyle. So, some categories that we're seeing in Dane County right now that are expanding on a large format basis. Von Maur, we talked about going into the mall. The other categories are the grocery anchored developments and grocery anchored projects. So Costco has a proposed site in Verona. Meijer has a proposed site in Fitchburg. Hy-Vee has proposed deals in Sun Prairie as well as Wanakee. And so that's a category that, I think as you see new retail development happen, it's really going to be driven by these anchors in our community. And those users are getting more and more creative on how do we capture the consumer? How do we get people to come to our store versus order online? And especially as Amazon enters this space more, there's going to be more and more competition. And to give you an example of a group that's doing that, and I think is going to do it to some level with their new stores here in Dane County, is Hy-Vee. So in Brooklyn Park, Minnesota, Hy-Vee just opened up a brand new 160,000 square foot full grocery store. Within the grocery store, they have a post office, they have a Starbucks, they have a Wahlburgers restaurant, they have a clinic, a local clinic, they have an Anytime Fitness, with an outlet that has a convenience store, a Costco, or I'm sorry, a Hy-Vee convenience store with another Starbucks in it. In addition to that, they have a DSW inside of the store. So this is a grocery store that really is becoming, it's kind of like a mini mall. And their whole focus on this prototype is to try to get the consumer to come in, do all of these other things that they would typically do, but within their four walls versus, going to the neighboring strip center or going down the street to get these services. So as we see the formats come out throughout Dane County for these new grocery anchored centers, we anticipate to see more of that. Again, just to compete with the Amazons of the world or anybody else that's providing delivery services for their goods. They want to try to get them back into the store one way or another, in addition to offering, the delivery like everybody else. Love to obviously see something like that in Middleton. Next slide, please, Kyle. So when we look at retailers that are expanding in Dane County and in Middleton, this is just a snapshot of some different uses that are expanding. One category that we see a lot of growth in is what we call Medi retail. So you take, like a Shopko Optical as an example, Aspen Dental. More on a local scale, you might see physical therapist or, dental groups, specialty medical. Example would be the Robertson Cosmetic Center at the corner of Deming Way and Greenway in Middleton. Those types of users are starting to gravitate to more of a retail type setting, and we're seeing more and more demand for them to go into a retail type setting. Another category that's really hot right now is home improvement. Sherwin-Williams is showing this on the screen. They have a number of locations they're expanding throughout Wisconsin and Dane County. Everybody's home painting their bathrooms right now or their bedrooms because of the pandemic. So they're doing great, and they're capitalizing on that and expanding. Another category that we see really growing throughout this market and kind of throughout the whole state is the financial institutions. So I show on the screen the Summit Credit Union. They're growing throughout. Other financial groups are growing, but what's interesting about their space needs is they're getting smaller, and so they're getting more and more creative on, instead of having a 4,000 square foot branch with 4 or 5 drive-through lanes, they have ITMs where they can put these in the parking lot. They can put it next to the building, like as an example, the State Bank of Cross Plains in Middleton did. So it shrinks their amount of square footage needed for their new development deals. So those are just a couple of the different categories that we're seeing. But again, it's more of a focus on service-oriented businesses versus hard goods businesses. Next slide, please, Kyle. So as we look at restaurants and restaurants expanding in Dane County, with the exception of a couple, a lot of these spaces are either, just fast casual type restaurants where you're going in and picking up your food, or, really deliver or drive-through oriented type uses. So, looking at just a couple examples in Middleton, either Quaker Steak or Point Burgers of the world, the PF Chang's, those buildings will not be repurposed as restaurants. They're going to go to other uses that want to capitalize on the great location and high visibility. But the number of restaurant groups that are expanding that are looking to go into spaces of that size are very small. If you look on the screen here, Texas Roadhouse, they have a proposed deal here on the west side of town, about an 8,000 square foot building. Portillo's, as I mentioned, is going in front of the Total Wine and the former Sears Auto Center. You know, it's a big building, but they're really focused on their drive-through. Portillo's will have 3 drive-through lanes going into their location. So those are some bigger format, bigger, square footage units that are expanding. But the majority of them, the ones that you see on the screen there, the Chipotle as an example, Panera, Jersey Mike's, they're all looking for smaller locations with a drive-through. Noodles and a Company is another one that's expanding, that they won't do a deal if they don't have a drive-through. And so it's really changing the way that people, not only here locally or developers, are looking at properties, but these tenants are demanding the drive-throughs, the convenience, the things that have really changed in consumer demand over the last year, and they're putting that into their new prototypes. To the extent of, with the new noodles concept that I gave, they will have a drive-through lane, but no reader board. So you do all of your ordering online on an app, and it tells you come to the store at 12:15 or whatever the time is to pick up your food and go through the drive-through lane. It'll be available at the window. So we're seeing an incredible amount of new ideas coming up that have been driven by the pandemic, which is impacting the size of real estate, the type of real estate that these folks are need. And it's all based on, all of the different things that they've experienced, the successes that they've seen, and the trials that they've seen over the last year with the pandemic. Next slide, please.
Hey, Jesse, before you go on, there was one definitional question that John had, neighborhood center and power center. Could you just describe what those are, and maybe give an example here in Madison so people understand?
Sure. So a power center is generally a lineup of larger boxed retailers or uses. So a good example of a power center in our market would be Prairie Lakes, right? So you've got a Costco, you've got a Target, you've got a movie theater, you've got Cabela's, usually large freestanding buildings or buildings that have a 0 lot line that are next to one another. Your neighborhood centers and your general retail, it's kind of a gray area in terms of the exact definition of those, but it's really kind of any of the other smaller shop retail that you're going to see, whether that's in front of a grocery store, whether that's, literally in a neighborhood. So there's kind of a cluster there of the neighborhood centers and general retail that really kind of go together. But as it relates to the power center, it's really a lineup of large box retailers kind of clustered together.
Thank you.
Yep. So as we go forward, as I mentioned with the different examples today, the click and collect, as we call it in the industry, will continue in all categories, retail categories, restaurant categories. It really comes down to who's going to execute that the best to see who the winners are as we move forward. And the retail is going to, become more and more connecting with customers online and in the stores. The Hy-Vee example that I gave earlier of their store in Minnesota is a great example of how retailers are getting creative on how do we draw people back to our stores and still offer the services online to them if they want that, but really have a good balance of the two. And as we move forward, the trends that we've continued to see over the last number of years is the footprint shrinking. So whether that's a restaurant, whether that's a retail use, we continue to see, uses becoming, more and more efficient and really requiring less real estate at the end of the day. So with that, do you have any questions?
I'll read from Jana Frank. She wanted to ask about vacancies, rental rates on State Street, and what you see both long-term and short-term there, and what's going to happen relative to what's going on State Street.
That's a good question. There's been upwards of 40 closures on State Street from the last statistics that we've seen of retail uses and restaurants. The rates are starting to go down. Historically, that's been a very high rent district. And so we're starting to see those numbers, go down considerably compared to, the numbers that we're seeing in the suburbs. So a 15 to 20% reduction in asking price versus a 5 to 10% reduction in asking price in the suburbs. So, the pricing is, getting more and more aggressive. Obviously, it goes back to supply and demand. What we see down there, I think it's going to take some anchor type uses in order for the revitalization to come back. Not only with everything that happened there over the summer and through the last year, but just generally, you look across the markets and there's a flock to the suburbs. People are getting out of downtown. We're seeing it, here in Middleton, in Wanakee, some Prairie, with people that are literally moving from Chicago and they're moving to suburbs of our community, or Milwaukee, we're seeing you name it. And so they're, on a kind of a broader level, there's this group of people that are coming in, but they're gravitating to the suburbs as opposed to wanting to live and be downtown. So, I think it's going to take, a lot of effort. And I think it's going to, you're going to need a couple of good anchors to draw people back down to that corridor and want to do, do new deals in there. But it's really depressing. It's unfortunate to see what happened in that corridor and what has happened. But, hopefully we can have some anchor uses or some, larger groups that go down to try to revitalize the area.
And I have one question for you relative to malls. You mentioned that the malls were going to have some struggles and have to reposition themselves, but JCPenney's been struggling, Macy's has been struggling. JCPenney's in Westtown and Macy's in Hilldale. I think I recall that both of them are going to stay open. Why are they staying open here versus some markets? And what is it, just Madison is stronger, or what's behind that? And how does Easttown compare too?
Yeah, I think, with how buffered we are compared to some of the other communities that, JCPenney's as an example has locations, we're on the top of the list. And I think their focus is how do we get, the sites on the top of the list healthy and try to keep them going. And it's doing things like selling off their outlots as an example. So they own, a lot of people, when they look at the mall, they think it's one mall owner that owns the whole mall. That's not true. JCPenney's owns their real estate on a zero lot line basis with CBL. And so locally, how they're getting creative and trying to stabilize that location is they're selling off some excess real estate. So they're selling off a pad site to be developed for a small shop retail development right at the entrance to the mall. So I think, for the east side of town, there might be a little bit more of a struggle in that location for the things that I mentioned earlier, just with the struggles that Easttown has. But as it relates to, their strategy, we understand that it's one of the, it's on the top half of the list. So how do we focus on keeping that one going as opposed to shutting it down? And with Macy's at Hilldale, obviously it's been a long-term anchor there. There are other uses that would love to take that space over, other anchor type uses that would love to go into that space. But as we understand it, they're doing well there. And it's much like the JCPenney's example, that it's on the top of the list. So we may downsize a little bit, but Madison is too good of a market to, close this location up, especially there with a co-tenancy and the density that they continue to bring to the center.
Great, thank you.
Thank you, Jesse. So full disclosure here, we are not the experts in multifamily, but we thought it would be important just to give you a high level snapshot of what's going on in the market. As you can see here, we've outlined some vacancy rates, and a typical stabilized rate is about 5%. So you notice Middleton is very tight at 1.87%. But the overall market is around 4.3%. One item that I did want to note is you'll see that the West Madison, which is the 53705, is actually over a stabilized rate at 7.2%, which which we believe that this could definitely be COVID related and specifically to student housing within that market, but it's just a speculation on our part. But one thing just to notice about, or to note about our community, and I think Middleton can be a little bit proud of, is that with workforce housing, Middleton had a goal to have 295 units by 2020. And they've actually succeeded that. And we're at 3.8 or 389 units of workforce housing, but there's still a gap there. They anticipate we need at least 30 more units in our market to bridge a little bit of that gap there in workforce housing. So I think we can take any questions that you might have on the multifamily market and try to answer those between the three of us the best that we are able.
That's all we have for today, but we're happy to answer any other questions. We're coming up at 1:40 right now. We wanted to keep this under 45 minutes. So I know, Jesse, you had asked me in an email earlier, what changes in office interior design and layout are you seeing as a result of COVID-19? I'm going to answer this question, but I'm going to punt it back to John Siemens, the designer, to add to whatever I say wrong. Generally, I believe that the office market will see greater efficiency. The $64,000 question will be, how do employees feel being as close as they were pre-COVID? Will they feel the same comfort post-COVID? And generally, I also believe that, and we may see a rise of square foot per person as a result of that, but I do believe we're going to see more collaborative spaces, more touchdown spaces, more hoteling, and each company will have a different mix of that. That mix of hoteling and touchdown spaces should shed square footage for most corporations, but it will vary company to company. Some companies will do it dramatically, others won't do it at all. But just law firms who tend to be the most conservative, and I'll say this in all due respect, with the biggest egos that want their own offices, they are even having hard discussions about shared offices. And if law firms are doing it, believe me, everybody will do it. John, anything to add on that?
No, I think you're really hitting, I mean, yeah, I'll just add a couple items, but you are really hitting on what I think is where we're going to see the market for office. And obviously that's a big range, a big broad topic, office users. Your comment about attorneys, couldn't agree more. Not with the kind of maybe ego comment, but yeah, if they're doing it, we are going to see it across the board. And I guess the thing that I would add is that as that office space total quantity starts to shrink, it's also, as you're saying, Craig, they're going to think about how they're going to use that space. Think hoteling, collaborative, as you mentioned. The layer that I think we're going to see more of an interest in is this, and it's the culture of the office. So the increased flexibility for staff, I think, will help attract and retain staff. But the culture of the company, of an organization, is really best held in an office, right? It's the bricks and mortar where you can reflect on what those values are of an organization. So when a staff or an employee is in the office, what do they do? How does the office change to really reinforce those values of the business and the company? How do you change the office environment to really enhance those values for the client, the customer that does come to visit? So I think those are some of the things that we're going to start to see. I know there's more questions about those. I think those are the kinds of changes that we'll see. I am sure that those are the types of questions and changes we're going to be exploring. So that's my thoughts. Thanks a lot.
Thank you, sir.
Both of you.
Appreciate it. On behalf of Jesse, Deanna, and myself, we'd like to thank all of you for coming. We hope this is informative and useful for all of you in your respective businesses. But we know there are specific questions out there. So feel free to reach out to any of us as you see our emails. Happy to provide you perspective, trends, whatever you need. We want to be helpful. At the end of the day, we want this to be informative to you, and we really appreciate the opportunity to present.
Craig,
Kyle, why don't you take this off and hand it back to Kirsten?
Terry Morosky, can I squeeze in one question before you leave?
Please, absolutely.
Yeah, hypothetically, vaccine increases, or maybe, third quarter or something like that. Most people are have vaccines. Does that confidence in the market change what's happening to all these conversations that we've been having? Or are you of the mind that what has happened will just change the dynamics and it will continue that way on a move forward basis?
I'm going to speak about it. Great question. Speak about it in terms just really high level on the different product types. I think life science will come right back to where it was, and we've seen that growth. I think industrial will come right back to what it was. We'll see that growth. I think retail will see a nice boom back, but I'm going to defer to Jesse on that. What it's done in retail and what it's done as office. It's the COVID situation has accelerated a change that was already happening. And from an office standpoint, when you talk to any office decision maker or corporation about it, their employees are demanding a greater work from home flexibility, future of work flexibility. So the question is, what is that balancing act that John talked about? We sort of, if you look at just a 25% people work from home 5 days a week and another 25%, and these numbers are not too far from the national surveys we've studied, that could mean a 20 to 25% reduction in office demand for a 20,000 square foot user. And, every company is going to have a slightly different bent on what works for them. And a lot of them have a hard time making that decision today because they don't know really how the employees are going to work. I believe in the office side, it will shift. I just can't predict, is the shift 10, 15%, or is it 25 to 35%? I can't predict that. I just know it's going to shift, and it's going to be a major shift. And I think that's why you see some of the prognosticators saying that. Jesse, do you want add anything on the retail side?
Yeah, one thing that we're seeing on the retail and restaurant side, really, I would say going into the fourth quarter of last year, is people are starting to see the light at the end of the tunnel. Particularly, for a new development project. We had a number of folks that pumped the brakes in March, and then, the later part of last year said, okay, we can see the light at the end of the tunnel. By the time we get this thing fully designed, this building fully designed and permitted and built, it's going to be, the fourth quarter of 2021. Let's go. So we're seeing that trend. I think another big part of it, particularly at the restaurant side, the local restaurants, whether it's a independent operator or franchisee, with this next round of PPP that just came out, that's really helped bridge the gap for a lot of these people that were ready to throw the towel in. We had a significant amount of fallout in that industry, and a number of people that had been kind of hanging on by a thread. And as we work with landlords to try to figure out what's the best case scenario, how do we work with these people to get them to let's just call it the middle of 2021. I think this next round of PPP loans, as well as the probability of more stimulus coming with the new administration, for them will kind of help them to keep going, to say, let's not throw the towel in, let's continue to operate. And so in general, we're seeing, on the local, regional, and, national level, those uses that wanted to expand, but slowed down because of COVID, are at least talking about it now. So I do think that going into the second half of the year, and I think more so next year, we're going to see, some really good absorption and a number of new deals that will, that will come out of the ground. But I think it'll be late this year or early into next year for a lot of them. But I think the big, positive thing is just with the, it's just a consistent thing we talk about with the second round of PPP loans and probability of more stimulus. People are, they're going to kind of stay the course and keep going. So that's good.
Thanks, Terry.
Yeah, no, thank you.
All right, I will just wrap up here. We've got some future chamber events listed on the website on the screen here. I would really encourage you guys to join us next week, Tuesday, for a business boost, where we're talking with NAMI Dane County on really the impact of COVID-19 on mental health. So whether that's you personally, your family, your business, your employees, all of it, I think that'll be a really good session with some insight and some helpful information. I want to give a huge thank you to our sponsors listed here on the slide, and of course to Jesse, Deanna, Craig, and Kyle for all being a part of this. Thank you for taking the time and making this event possible. I'm happy to stick around and keep the Zoom open if you guys have more questions for our speakers, as long as they've got some time as well. And just as a follow-up notice, we did record this session, so I'm going to be posting it on the Chamber's YouTube page. So if you want to rewatch or send to anyone that should have maybe attended that didn't get the chance, you will have that option. The group is also going to share the slides from today, so those you'll get in an email from me afterwards. So thank you all for coming, and we appreciate it.
I'll stick around.